Hey guys, hopefully everyone is doing well. Today's target is to solve question number 3. The chapter which we are related with is accounting ratios. Kindly note that this question is little different to the previous questions. In previous question here years were mentioned, year first and year second. That is why whenever average was required, we have calculated. Now please note down very carefully when you have two different companies, this is X company and Y company. When you have two different companies, it means all accounting ratios related to X company will not have any concern with the accounting ratios you will calculate for the Y company. So these are two absolutely different elements and you are not needed to mix them. So formulas would be applied for X company separately and formulas will be applied for Y company separately. Second most important thing regarding this question is you are not informed what ratios are required. Instead of that, heading is given. Like in first heading, it has been said to calculate liquidity ratios, where liquidity ratios include two things, current ratio and acid test ratio or quick ratio. So they have not mentioned current ratio and liquid ratio. Rather than that, they have directly written the heading. So you will have to decide what elements or what ratios are coming in liquidity ratio. In paper, these answers would not be available. I'm sure that you are noting down very carefully. These answers would not be available in your question, in your paper. So you will have to know about that, what ratios are included in liquidity ratio, what ratios are present in profitability ratio, activity and financial position of two companies. So please understand that you will have to have complete data regarding liquidity. For that, notes are available already and you can see those notes, what ratios are present in liquidity, what ratios are present in profitability. So these were little introductory matters which were important to discuss. So let's start our question. This is your third question. So very first thing is we need to calculate liquidity ratios. So you may write down here your heading. So we are going to calculate liquidity ratio, which includes two ratios. First is current ratio, and as usual you have complete idea how to calculate current ratio. For that you need current assets and then you need current liabilities. When you will divide your current assets over current liabilities, you will get your current ratio. So we are now open to calculate them. So let's get back to the question and see how many current assets are present. For that, look at here in our question, this first part, sales and profit after tax. This is profit loss statement and remaining are all those items which are concerned with the balance sheet. So we have comprehensive idea that these two elements are part of profit loss statement and remaining are assets and liabilities. So going through over here, you can know that from here fixed assets, inventories and current assets, these are only assets, and bank credit, creditors, long-term debt, general reserve, capital, these are liabilities. So it is uh, a matter of common sense and we can assume that yet that you people have already in your understanding difference between assets and liabilities. Right now we need current assets. So there are two elements, inventories and current assets itself. These are two items, current assets. So what we are going to do, just write down the amount. We have 331,000 first item, and then you need to put current assets, and that is 544. So just put down 544,000. So guys, in this way our current assets completed. Now we are open to write current liabilities. For that, let's get back to the question. Liabilities are starting from here. Capital is not current liability. General reserve is not current liability. You can see it is long term return. Current liabilities are for the short term. Again, no. And now creditors and short term credit or loan. These are two current liabilities, 382 and 60. So let's put it out, 382 and 60. So we have got all the elements present over here for current assets and current liabilities. Now we are going to take sum of both sides. Here we have calculated the sum of current assets. Sum of current liabilities have also been calculated. Now it's time to calculate our ratio, current asset divided by current liabilities. So we have our first ratio, which is current ratio calculated, and this is 1.79, or you can write 1.98 instead of 97, because 9 is after 7, so you may write 1.98. Alright guys, now look at here, current ratio answer is 1.98 for X company, and we have 1.98. First ratio has been completed. In liquidity ratio, second ratio, we have liquid ratio, or it may be called acid test ratio, or it may be called quick ratio. So these are three different names for liquid ratio. And how do we calculate? As usual, we need to put liquid assets first, and you will divide it with current liabilities. In this way our acid test ratio can be calculated. Now let's calculate our liquid asset, and you know it very well. All amounts I have copied, and to calculate your liquid asset, what do you need? For liquid assets, you will take same current asset already written, and you will subtract stock and prepaid. While in this question, current assets are already been calculated, 875. So here let's put 875,000, and you are needed to subtract stock. Stock is 544, as you know that. Let's get back and see inventories. Stocks are 331. So we will subtract 331,000 from here. With this, we'll be able to calculate liquid assets. As in this question, prepaids are not present, so you will write 0 for it. So we have got, this is first method, and second method is just to write all current asset, but don't write stock and prepaid. Inventories are stock, 331. So just remove this stock from here. This is second method, and obviously you can see same answer, 544, 544. So values have been taken, and now we are going to calculate their sum. Current or liquid assets are already calculated, current liabilities are 442. We are now open to calculate our ratio. Liquid assets are divided by current liabilities, 1.23 is your answer. Look, quick ratio, and for X company is 1.23. So guys, in this way our liquidity ratios completed, and now we will see profitability ratio. As you know that net profit ratio, this is the first ratio which is associated with profitability ratio. So let's calculate our net profit ratio. which would be number third, net profit ratio. And I'm sure that you remember the formula. We need to have net profit after tax, or net profit is enough to be written, but better to write full name, net profit after tax, and then you need to write net sales. Alright, let's get back to the question. Here only sales are mentioned and cost of goods sold is not given. Please repeat what I have said. Sales are given, but cost of goods sold is not given. Gross profit is not given. So we will assume, repeat this word, we will assume that these sales are net credit sale as no other information is available. So 32 lakh is sales. We are writing over here 32 lakh sales, and now we are needed to write profit, and here directly profit after tax has been mentioned, which is 123,000. So we are going to write directly. We don't need to calculate only for this question. Alright, values have been entered and now we will calculate it. Net profit after tax divided by net sales. So we have 0.38. If you want to write this answer in terms of percentage, this is in terms of times, or you can write it in terms of percentage. For that, just take this amount and multiply it with 100. So you will get in terms of percentage. So both answers we have written in terms of times or in terms of percentage. Let's see what answer is given in our question. Net profit ratio for X company 3.8. So this is your net profit ratio. Answer is 3.84%. So answer is given in terms of percent, but if you will write in terms of time, that would also be okay. So now we are going to start our number 4. As you can see that we need to calculate profitability ratio. Next we will enter return on shareholder fund, which is also part of profitability ratio. The formula of return on shareholder fund must be in your mind. Net profit after tax and divided by shareholder fund. So this is your formula for return on shareholder fund. Now as usual, you can see net profit after tax is already available in the question, and here it has been given profit after tax 123. Write down 123,000. Now shareholder fund, this formula should also be in your mind. How do we calculate shareholder fund? For that you need your capital, then you will add your reserve, then you will add surplus. You will get your shareholder fund. Let's see in the question. Capital is given, that is 1 million or 10 lakh. Just write down, and then you need to add reserve. So we also have reserve. Look at here, general reserve 232, and here we are mentioning 232,000, and now we will search for the surplus. But here you can see this is the starting and ending points, but surplus is not present over here. It means for surplus you may write 0. Surplus is not present. Now we are open to calculate shareholder fund by adding capital, reserve and surplus, and that is 1232. Write down over here 1232,000. So guys, our formula is completed, amounts are entered, net profit after tax divided by shareholder fund. So we have got 0.0998. This is in terms of times, or if you want to write it in terms of percentage, for that you will just take this amount multiply it with 100, you will get your answer in terms of percentage. Now we will see what kind of answer is given in your question. You have calculated return on shareholder fund 9.98. So here return on shareholder fund 9.98, it means answer is given in terms of percentage, not in terms of times. But if you will write your answer in terms of time, that is also acceptable. So we have completed profitability, where we have calculated net profit return on shareholder fund, and now activity ratio, where we need stock turnover. So here this formula is number 5. We will calculate stock turnover ratio. This formula should also be in your mind. For that you need to have CGS or cost of sales. We are writing complete instead of abbreviation of CGS. It should be written as cost of goods sold. So we have written cost of sales, and then you need to divide it with average stock or inventory. So here again go back. I have told you that only sale is present, gross profit is not given, cost of sale is not given. So you will assume that this 32 lakh is cost of goods sold. Assume, please understand that I am using the word assumption. Otherwise you will have to calculate cost of sales. 32 lakh, yes. And what we have written, 32 lakh. Okay. Now we need to calculate average stock. And at start of question, I have told you that these are two different companies. This is not first year and second year, so you do not need to calculate any average. We need to divide it with stock. Inventories are present 331,000. So just write down 331,000. These are stock, and its second name is inventory, which is used in this question. Let's put a bottom line or divisor. Alright guys, formula is completed, amounts are entered, cost of goods sold divided by average stock. So we have got 9.67 may be written. So this is your answer of stock turnover, and here you can see stock turnover is 9.67 and our answer is 9.667, or it may be written 9.67. So 5 formulas are completed. Now we are going to see our activity position, where we have already calculated stock turnover, and now we will see the next formula, which is number 6, net capital employed turnover ratio. Although you must have this formula in your mind, but in case if you want to know, I will write this formula and you are responsible to memorize it in a better way. Look, I have told you that this chapter is all about formulas, and when you will not be having proper formula in your mind, it would surely be very difficult for you to properly prepare this question. So it is request to memorize all the formula. Net capital employed turnover ratio. For that we need to have cost of sales, and then it would be divided by net capital employed. And here you need to know net capital employed is actually long term fund. And how do you calculate long term fund? For that you need to have shareholder fund plus long term debt. So this way you can calculate net capital employed. How? Shareholder fund plus long term debt. And you may write, as you know, that shareholder fund, how do you calculate? Capital plus reserve plus surplus. This is your shareholder fund, and then just write down long term debt. So guys, in this way you will be able to calculate your net capital employed. Actually, this is equal to is not needed. Alright, please note it down. Net capital employed can be calculated by adding capital reserve, surplus and long-term debt, with which it would be net capital employed. While actual formula is shareholder fund plus long-term debt. Cost of sales, as you know that it is cost of sales written over here, and this is third time I'm telling you that cost of sale is not present actually in the question. Gross profit is not present and there is no other hint to calculate cost of sales. So sales would be considered, sale would be assumed as cost of sales. 32 lakh. So we are going to write as it is 32 lakh, and now we need to calculate net capital employed. For that, what elements we do need? First of all, capital. Let's get back, and you can see that this is your capital 1 million or 10 lakh. Write down. And then you need to add reserve. Here is your question. Reserve is 232. Write down 232,000. Then you need to add surplus. And in whole question, surplus is not present. For that, just write down 0 for surplus. And then finally, you need to add your long-term debt. Let's see if it is present in our question. Yes, long-term debt is given, and that is 8 lakh. Let's put 8 lakh as well. Alright guys, so in this way, capital 1 million, 232 reserve, surplus 0 and long-term debt 8 lakh. It has been completed. Now we can put it on our calculator where all four items would be added. So we have got 2032, which is our capital employed. Let's put it over here, 2032. Okay guys, in this way our formula has been completed where cost of sale was needed. We have put cost of sales and net capital employed has been calculated like this. You are humbly requested to please memorize these formulas. These are very important. So next step is just to take your cost of sale divided by net capital employed. So we have got 1.57 for net capital employed turnover. Let's get back. This is your net capital employed turnover and answer is 1.57. So we have got 1.7. In this way, sixth formula has been completed. Last is financial position, which is calculated by debt equity ratios. So number 7, we will calculate debt equity ratio. As there are three formulas for debt equity ratio. First is external debt and it would be divided by internal debt. It is better to write in proper way. So this is your external debt and you will divide it with internal debt. This is your first formula. And actually I have told you several times that these three formulas can be used, but it's up to the level which your book has used. Then we have long-term debt and it would be divided by shareholder fund, and we have long-term debt divided by long-term fund. Alright guys, in this way we have written three formulas and any one formula has been used by the book and we don't know which formula has been used by the book. So let's say we are taking this formula. Why I am using long-term debt over shareholder fund? Because you can see this question. Long-term debt is given. So we have doubt that second formula should have been used. So if using second formula answer is not matched, then we can try external debt and internal debt, or we can try this third formula, long term debt over long term fund. So for the time being, let's guess that second formula has been used. This is debt equity ratio, second formula. All right, long term debt is already given in your question. Look over here, long term debt, that is 8 lakh. So we will directly put 8 lakh over here, and now shareholder fund. As you know that shareholder fund would be calculated by adding capital reserve and surplus. You have complete idea. Shareholder fund would be calculated by adding capital reserve and surplus. And here just put the sign. This way you can calculate shareholder fund. But do you remember we have already calculated shareholder fund? And look over here. This is your shareholder fund, capital reserve and surplus. Capital 10 lakh, 2 lakh 32 reserve. Capital 10 lakh, reserve 2 lakh 32, surplus is not present. So you may write directly over here. We have 1 million capital and 2,32,000 is your reserve, while surplus is not present. Now just put it on calculator. I'm repeating so that you can understand it in a better way. So we have got our answer of what? This is your shareholder fund which was needed, 12,32,000. Just put 12,32,000. So guys, in this way formula is completed, amounts have been entered. Now we are open to calculate. So long term debt divided by shareholder fund. So this is your answer, 0.064, or in terms of percentage you can also write, just take this amount, multiply it with 100, you will get your answer in terms of percentage as well. So we have got long term debt over shareholder fund. Let's check if answer is matched. Otherwise we will apply the next formula, debt equity ratio. So we have 0.65 and our answer is already 0.65, which has been written over here. After 4 we have 9, so we can round it up as 0.65. So luckily what had happened, our guess was accurate. This formula has been used, and with the help of this formula our answer has been matched. So when answer is matched, we do not need to apply first or third formula. In paper you may choose any one of the formula, as answer would not be available in your exam, so you may use first, second or third. Luckily we have used second formula and answer is matched, so we do not need to apply first or third formula, as single formula is enough. So guys, in this way 7th ratio has also been calculated and its answer is matched as well. So these were 7 requirements. But keep it in mind, all these 7 requirements we have calculated for the X company, and you are responsible to calculate same for the Y company. Almost it's a cheating. You will use the same formulas. Instead of taking amounts of X company, you will just take amounts of Y company. Nothing would be changed. So you will solve this question for Y company as well. I will not solve it because everything is absolutely similar, except you will take amounts for Y company in a different way. So in this way our question has been completed. Once again I am showing you current ratio 1.98. This is 1.98. Then we have quick ratio 1.23. So here we have quick ratio 1.23. Then we have net profit ratio 3.84. So this is net profit ratio and answer is 3.84, and here you can see 3.84. Then return on shareholder fund 9.98. This is return on shareholder fund 9.98, number 4. And then we have stock turnover 9.67. This is stock turnover and 9.67. That's okay. And then finally we have net capital employed 1.57. Net capital employed 1.57. It has been completed. Then last debt equity 0.65. So here we have debt equity 0.65. All answers are matched. Question has been completed. Solution is in front of you. All ratios have been calculated. But in spite of that you have got the solution, I am requesting you to practice this question for 3 to 4 times. And after that, even you have everything written over here, but if you are feeling anything difficult, anything problematic, you may share your problems through messages, text, or you can directly contact and share your questions. I am very sure that your queries, for your queries, I would be instantly responding those queries. Thank you very much for your time. It's time to say goodbye. Allah Hafiz.